Welcome everybody to the Steady Trade Podcast. This is will be, I'm sure, one of my favorite episodes, and we've had a lot of requests. I don't know if you know or not, Arick. I've had a lot of requests for you to be on this because you did hit trading stardom, I would say, when you were releasing your YouTube videos back in the day. But not only that, but your story is particularly unique because you've done what many of us aspire to do. You've literally gone from trading in a van, running a full-time job, and then you've gone on to not just have success in that, but go on to make thousands and then hundreds of thousands of dollars. So why don't you start by telling us just from the beginning how on earth you've done that?
Yeah, I'll jump in real quick, like I always do. The listeners love the king of interruptions, Tim. But you know what I always like to start with is, you know, it's kind of like the Marvel comics or the DC comics. What was the origin story? Where did you first find trading? How did you begin?
Let's see, this is going on 5 years. I started about 5 years ago.
Oh, wow. Okay.
Everybody, every trader you've ever talked to probably says, I saw the stock market. I was interested. I wanted to get into it, but I had no fucking idea what I was doing. So I just randomly bought some shit and then lost some money and said, I really need to take a step back and learn what I'm doing before I just randomly lose all my money, So I did that for, I don't know, about 4 or 5 months. And then, kind of looking on YouTube, learning little bits and pieces here. And then, of course, I did come across Tim Sykes' video, and that's kind of where I kind of get a lot more interested. I learned a little bit from him, but, I found out early that I don't really trade like Tim. So what I did is I kind of took bits and pieces and learned, little information here and little information there. And then I kind of developed my own type of style or what I like to trade on. Tested out, I back tested all kinds of indicators and things like that, and just kind of fit my style, because at the time I was working 9 to 5 and I really only had about 30 or 45 minutes in the morning to trade. So I couldn't sit around and, look at stuff all day. So I had to find something.
Because you're kind of, I think you're like Central Time. So you kind of like you could kind of trade the open before you had to go to work. Okay. Yep.
Because, market here opens at 8:30, and, I always have to go into the, at the time I was working HVAC, and that's what I did for 10 plus years. So I used the service, I was a service guy. I set up a little office in my truck so I could, leave the office and then go park in a parking lot somewhere and then use my mobile hotspot or my phone and hook up to the internet. And then when I got out, I could just, take my phone, because, what I started off with was just a small TOS account, Thinkorswim. Right, because they're the only ones that have a mobile platform that I could actually use while I was home. So I, opened an account with them, got started. I paper traded for about 7 or 8 months to refine exactly what I knew I was good at and what I was not good at, which got me to about a 70-something% win rate. And then I knew, okay, well, I can take it from there and then just start, we'll just dive into it. And of course, I started off in the penny stocks, a small cap world. Like I say, I had a lot of success in there. And then after a few years, I decided, I want to kind of, because as you guys know, the penny stocks are not always like right now. If you get one low floater runner once a week or every other week, everybody piles into it.
And actually this as we just recorded an episode yesterday, and we the entire episode is exactly on that topic.
Yeah.
Because Steven started trading more of these higher priced, quote unquote, real stocks for that exact reason. Yeah.
And that's, I wanted a more overall knowledge of the market, because, I had a friend of mine who lives in Houston with me, and we became real good, close friends. And he started off with Tim too, and eventually moved on to do his own thing. But he was not always into penny stock, and he kept telling me, man, just there's other opportunities out here. Just kind of take your time to venture out and learn about this stuff. So I did. And then I built my, my overall knowledge of the market and started moving to mid and large cap stocks. I didn't throw away the penny stocks by any means, because they're always a go-to when they're in play.
Right.
But, learning more about how to trade, earnings, how to trade analyst calls and things like that. Just so, a more broader overall knowledge of the market. learning how to read better PR news on, these small cap stuff. So you can kind of read between the lines, one of those read between the lines type deals.
Yeah.
Because they'll put out some, of course, some BS PR that says they're planning to have a meeting about talking about something.
About some stuff that maybe we're thinking about, like the clouds and sometime in the future. And
it's like I plan on eating dinner later, but I mean, so then you see the stock just skyrocket pre-market, and I'm just, for the most part, I'd say the advantage is on the short sellers for penny stocks. It really is, but
that's true.
But
yeah, we had a recent
can't short or don't know how.
A recent episode with Matt Owens was, and it's been one of our most popular episodes is, Matt has ventured out more. He's more of a futures and options type guy, but he said the exact same thing. He's like, if you can be patient, if you can get ready, short and penny stocks is the dream. Yeah. The problem is you might only get one a week or one every 10 days.
I made 1, 2, we were talking about 1, 2, 3, 4, 6 trades before, not, an hour and a half. And only one was a long. The other 5 were shorts, and they were for, I think the minimum I'm looking for is 50 cents to $1, right? So if I can't get 50 cents, I don't even take the trade really. But that's kind of where I've evolved from going from 10 cents, 12 cents, these little scalps here and there for exposing yourself to a large position size, which brings a lot of risk inherently, as opposed to toning down my share size and getting more of a move. We look for range plays. But, I mean, that's kind of where I started. I started in the small caps. Like I say, I was trading in a truck, in attics, wherever I could do, I mean, people would, the customers would come out of their house, I'd be on the phone, and I'd have to duck and dive, being in a position, I have to kind of put my phone down and act like I'm doing work.
I'm connected to your air conditioning unit with this app, and I'm upgrading the firmware on your air conditioner right now.
So it's all technical stuff. You wouldn't understand anyway. Until I got caught one day by a guy who was the actual trader. He was like, "Is that think or swim?" I'm like, "Maybe."
but Arick,
I mean, you meet one trader, and we became instant friends. We went in and started talking about what he's trading. But I mean, that's just kind of the background that I'm at. And I mean, where I'm at now is, I spent 3 years building a plan. Everybody kept asking me, a couple of years ago, why don't you just go full time? Just go full time. And what I said is that, that sounds great and all. You make a little money, and then everybody just wants to go full time, right? Because you've had a little success, you make a little money, and then you just jump in full time. But what I said is, I have a 2-year plan in place, and until that 2-year that plan is accomplished, I won't even think about it. I have goals that I need to meet first. And then, this past January, it was actually my wife who told me. She's like, "Why don't you just quit?" Because I just, you go to work from a 9 to 5 that you've done for 10 years. You just like automatic. You get up, you want to go to work. And I was not doing anything anymore. At that job, I wasn't making any money anymore. She goes, "Why don't you just quit?" I was like, "Why don't I?" I guess so. She's like, "You don't even want to go back to work, do you?" I'm like, "No." She's like, "Well, then quit."
Nice.
So I thought about it for a few hours, and then I said, "You know what? That's it. I'll just clean out my truck, take it back, and I'm done. We'll just go full time now." And that was in January, I think. Yeah, 1st of January. And since then it's been it's an adjustment. Not, like I'm done 2 hours in the market. I got to figure out what the hell I'm gonna do with the rest of my day. It's like, do I go fishing? Do I take a nap? I mean, these are stuff that, I mean, it all sounds great. But sometimes, and actually I think you can get bored. Sometimes you get bored as a day trader sitting at home.
Yeah. I mean, and that's actually, one of the reasons, you mentioned that is one of the reasons I was drawn to doing the podcast and stuff like that is, I mean, some days you're kind of done with work at 11. And I mean, the majority of us have kind of that Puritan work ethic, that's kind of handed down.
I gotta do
and
something.
it's like, and you're like, well, geez, I it's like, I need to do something. It's 11 a.m.
Yeah. I mean, like you live in Michigan, so sometimes it's just too cold to even step foot outside. And here,
there you go.
Sometimes it's just so hot. I don't want to go out. I don't want to even open the door.
Guys,
go swimming for a little bit.
This is a very nice problem to have, to be thinking I've got a lot of free time because I've got this self-sustained lifestyle. But Arick, for everyone out there who still wants this, how did you come out of nowhere on YouTube just making these $1,000 trades, what was the first pattern that worked for you? How did it click like that?
I started trading red to green setups, green to red, and there's
One
a
of my
difference.
favorites.
There's a people opinion vary on what's red to green, right? For me particular is how it opens on the day, not from where it closed to where it opened. If it's, technically that's still green if you're gapping up. But for me, I'm looking for stuff that's actually like the opening price. If we fail or hold that, if we sell off, find a base, and then come through the opening price, and then basically go red to green, right? Those have, I think, the most power, because what happens is you get a lot of people who are shorting the open, they have to cover theirs, and then you got a lot of buyers coming in, which just sends the stock skyrocketing. Those are ones that I found worked really, really well, because I tried doing breakout patterns. Breakouts for me, from a statistic standpoint, had about a 50-50 win rate. And I'm like, well, I need to improve on that. So let me find something that I know I have a better shot at. So I stopped being a breakout trader, as you call them, and started finding red to green, green to red. And what I really found was I liked the green to red. And then being a short seller, shorting these, because you may or may not have heard this. I know there's, you guys know Kunal Desai.
Sure. Yep.
I heard it from him. He said that, these stocks kind of stair-step their way up, but take the elevator down.
Oh yeah. Yep.
And, if you can learn how to short, and you can short, and, everybody says, you get a lot of short sellers get trashed upon, but I'm not really a short seller. I'm non-biased, right? I trade what's in front of me. If the chart says short, then we short.
Well, and that's a great point. First of all, Kunal, love that guy.
Yeah.
I've hung out with him several times. Great guy. We'll have him on one of these days.
Yeah, I was in Destin a couple of weeks ago, and I tried to hit him up, but our schedules never. He was sending messages, "Come on by the house." I'm like, man, I can't ever meet up because we had the family there. But yeah.
But yeah, like you mentioned, what I joke about a lot is these guys that are just bearish no matter what. What you're doing is you're just trading the price action.
Yeah,
again, if this stock's up 15 days in a row and it's junk and it goes red on the day, man, you hammer that thing.
Yeah, why trade against the trend is my thing. If it's trending up, why counter trend trading is really hard, because you're going to either have to scalp it or you're going to get smashed, right? So take the stress out of it. Just trade with the trend, right? If we're bullish, then we buy. If it flips over and tells me a different story, well, then we'll just reverse it and go the other way. So that's the example of what I was talking about with Tenex this morning. I couldn't find a good entry point for long. I kind of missed my stuff because I was looking at 5 other ones. So I just kind of let it do its thing, run up, top off, set in a higher low, or a lower high, I should say.
Right.
But, just let it do its thing, and then let it tell me when it wants to break down, and then, do that way. But, it's just about – a lot of it just comes down to experience. I think what a lot of new traders get caught up in is all the hype and the bullshit they see on Twitter.
It's a lot of it's FOMO.
Yeah.
A lot of it it's like, you that junky stock up 50% in pre-market. It's just like, it's that
and
unicorn, and you can't resist.
Other traders posting these big, huge gains that they made off this little penny stock, and it ran 300%, and they're like, well, I can do that. But there's actually, trading penny stocks, these low float runners, it takes some skill. It's not just random buys, right? You don't just because they jump in. It does take a little bit of skill to trade these things. And I found that the hard way in the first, 6-7 months. Still being in the green side, but not, just trying to figure out how to play them. But I think a lot of people get caught up in wanting to make $1 million their first year in trading. They went from doing nothing to try and go to a full-time trader making $1 million. There's there's a few people out there that have done it. I know the Stephen Ducks. I don't know him, his whole story, but I've seen him around, and I think the other gentleman's Roland Wolf.
Yeah.
Yeah, those guys, all the power to them that they were able to do that. But that's not everybody, right? If I say this, if you can make, how much does it take if, let's say, you had $20 an hour job, right, which is pretty good for most, I would say. How long is it, if you worked a full 8-hour day, it's what, like $160 you make, right? Going to 9 to 5. Well, if you can make $200 a day, just a day trading, set small goals, well, you're already above your 9 to 5. You're already making above your 9 to 5. And then if you can increase that by 300 a day to 500 a day, right? Make $500 a day, 10,000 a month. I mean, that's more than most people make. So it doesn't have to be these huge expectations where you need to make $1,500 or $3,000 a day. I mean, eventually, yeah, everybody wants to get to that point.
Yeah, and that's always been.
Start with some sort of realistic goal a day, right? I mean, that's just my personal opinion.
Yeah, I've always said, whether it be the Gratanis or the Ducks or the Rolling Wolves or any of these guys, be inspired, but don't try to emulate that. They're the outliers. But I've always had, for 10 years now, I've always had that working man approach. It's like exactly like you said. I mean, now you're not going to make $500 a day every day. But if you average that,
right,
you're in the you're in the top 5% of earners in the country.
Right. I mean, like I say, keep it small because you're going to have drawdown days. Not every day. You're not going to have 5 green days for 4 weeks in a row. I mean, I know some guys, especially a friend of mine, they can do it. They've got, statistically speaking, they're like a 99% win rate, but they're very specific on what they're doing. And like I say, it's one of that's not everybody. You have this Stephen Ducks or the Tim G's who can do that stuff. But yeah, be inspired, but don't try and copy exactly what they do, because it took me a good year and a half to figure out exactly what my strategy was, and then implement. I use certain technical indicators, of course, and I'm constantly improving that because I want to trade like a computer. I want to be like an algo myself, where it's emotionless, right? Yep. Chart says do something, I do it, plain and simple, right? Commit to the loss, right? If I set a maximum loss, or I'm in it for, let's say 400 shares and I got a 50-cent stop loss, right? Well, then I commit to that. I'm either going to lose $200, or I'm going to get my target and then plus some. So don't try to, most people get in it and then they see the emotion because it pushes them against them a little, and then they freak the hell out and go, oh, it's going up. I'm red. And another thing, take your damn P&L off your screen. First and foremost, when you get your broker open, take that shit off, because unrealized, realized, don't make it a surprise, right? When you close a position, you're like, oh, look at that. I made so much money, or I lost so much. But just stay committed to whatever your plan was going into the trade. And then again, have a plan going into the trade. Don't randomly jump in, because I've seen, there's a few guys out there who run chat rooms that say shit like, I jumped into this trade. What the hell are you jumping into a trade, right? You just randomly pick a spot and like, okay, it looks good. And then you see these, large gains, of course, but you also see big, giant losses that come along with that. So, that's just my opinion, is have some sort of plan. And hell, it wasn't until a year ago where I actually had written out my trading plan, have it written out on a piece of paper in front of me. Because I was always one of those guys where, well, I know what I like, but then emotions or whatever got me like, well, maybe I can just move it down 10 cents. Maybe I can just squeeze it down a little bit more. And then it's like, shit.
How did you get out of that habit?
I should have committed to what I was thinking, but now that, I always tell them, and this was a friend of mine who told me this, he goes, put it on paper, put it in front of you on your desk. So anytime that you're thinking about, if you're hesitant, don't give it the eyeball test, because the eyeballs, you may be cross-eyed and not know it, right? So have it on a piece of paper that says, well, does this fit? Or can I kind of go through a checklist, right? Does it meet my criteria? Is it X, Y, Z? Yes, yes, yes. Do I get 3 out of the 4 or 4 out of the 5? Okay, everything kind of looks good for what I know I can do, and then take the trade. That's what's helped me dramatically over the past year and a half, is being able to just kind of refer it, keep my stuff in check, and like I say, trade like a computer with trying to be most. It's not going to always happen. I still get FOMO. I think we always do. Emotions get the best of us, and sometimes I get stubborn, and I'm trying to short a stock, and it's just telling me it's going to go up even more. I'm like, no, I'm going to short you. And then I get my ripped apart, and I'm like, I'm going to do it again. And then I'm down $600. I'm like, what did I just do? Why did I do that? So it still happens to everybody, myself included. A couple of weeks ago, I had the same thing. But just kind of stick to what you're good at, but find out what you're good at too by what helped me is at the end of the day, kind of review my trades, put it in some sort of, Profitly, or there's TraderView. There's a lot of apps and software out there that you can input all your trades. It will give you all the statistical analysis of what worked, what didn't work. And that's what kind of helped me come to the conclusion, okay, well, I can eliminate this, and this, and I'll just stick to what these are.
It's funny. I don't know if you've ever read the book. Is it Turtle Trader? We're about to review it. Everything that you're talking about in the interview sounds exactly like.
This is classic Steven moment. I'll let him ask the question. He's like 90% through this book, and he can't even remember the title of the book.
What is it? Trade and Turtle. Teenage Ninja Turtles.
Yeah, the only book I read is right there. That's the man.
That's it.
I don't read many books, but I read this book because I've been a fan of Gary Vee for years and years.
Yeah, love him. Actually, it was kind of cool. I got to meet him a couple months ago.
Yeah, I saw that. But I'm not much of a reader, so I need visual. I'm like a 5-year-old. I need visual props, things that come out of a book, maybe better for me, or audio, because my attention span is little to none. So.
No, but it's cool. But for the newer guys who are trying to find that pattern, who are trying to find the groove, what advice would you give them? You've kind of gone through some stuff with recording your trades, but is there anything else?
Yeah, quit trying to master every setup there is. Pick 2 or 3 and master that, right? What's that saying that you're a jack of all trades but master of none?
He who chases many rabbits catches none.
Exactly. So that, everybody wants to be all over the place with doing this setup and that setup, this pattern, that pattern. Just pick a few and, kind of master those and see how they work for you. Because like I say, I started off trying to buy, breakouts, but I found out quick that it didn't really work for me. So I went to something else, like the red to greens, or, wedge patterns, things that I can clearly identify that if this thing is in this triangle pattern and it breaks one way or the other, then I know then it can tell me where the direction is going. Right. So I would say that just try and pick a few patterns and try and nail those down before you try and just be all over the place. Cause being all over the place just leads to more confusion. And then you really don't understand why you're losing. So,
I know a lot of guys that are like, I made $1,000 and it's like, they don't even know what they did. It's like, that's great, but how is that repeatable? How is that going to lead to consistency? If you're just spraying bullets everywhere, you need to know why and how you're making it.
Yeah. And I know it's probably going to sound typical trader BS, but I learned more from losing on my losing trades, because I could clearly identify that when I took that trade, obviously, I was going against the trend. I'm trying to short something that's clearly going up in a bullish trend, and everything about the stock said don't short, and I did it, right? Or trading too early. There's another thing that I learned. Everybody gets bell fever, right? You're just ready to click buttons and push everything. And I have a kind of a rule as one of mine. I wait 10 to 15 minutes usually. Because the first 5 minutes, you're trading against algorithms and stop losses and all these things. That the first 5 minutes is the most volatile there is. So let everything kind of pick its direction, kind of settle down.
Yeah, to me,
miss everything in the first 15 minutes.
Yeah, to me, 9:45 is the open.
Yeah, and
I let that wacky shit. I let that wacky shit happen.
Yeah,
and then it's like 9:45. Okay, now it's time for business. Yeah.
Yeah, I think, the earliest trade I took today, for example, was SLS, which was like right at 8:47. So
which is 9:47 Eastern time.
Yeah, for me. So. But and like I say, everybody just thinks that you have to. And I had that same thing, a long time ago. Is that as soon as that bell rang, I'm ready to push buttons, and you'd see it move up, so you buy, and then it just pulls and yanks on you, and you stop out, and you wonder what just happened. So that's just my opinion. I always say that let things kind of settle out. The market's open a long time. You're not going to miss every trade that you're looking at in 15 minutes. Some guys, sometimes I'll wait an hour before I take a trade. It's just about being patient, letting things come to you, not rushing, not trying to trade outside of what you're good at.
Yeah,
if you don't know what you're good at, that's how you learn.
I talk about it a lot. It's like I actually say this to myself. It's like sometimes, it's 9:33 a.m. and you're like, oh my gosh, I got to do something. And it's like, wait a minute, you got 6 hours and 27 minutes left in this day.
Yeah,
chill out and wait. It's like so many guys and gals get in that mindset that it's like, man, if you're not trading, 3 times before 10 a.m., you're not doing what you're supposed to be doing. And that's it works sometimes.
Part of my rules is I literally have my phone set on an alarm at, for my time, 11 o'clock, my alarm goes off, says no more trade entries. I won't trade any more into the entries because now we're getting into lunchtime hours.
Yep.
So I trade the first after 15 minutes, that first hour and a half, 2 hours. And then if 11 o'clock and that bell rings on my phone, I cut it off because I found that I literally took a trade at 11:15 about 2 weeks ago and lost my ass. And I was like, wow, I just went against all my damn rules. So, as stupid as it may sound, I cut it off at 11. I come back 1:30 Central Time. So I got about an hour and a half left in the market. Just kind of watch everything kind of set up. And it may not be that I come back and trade, but I'll see how things close out, how they reacted to certain points. Then I can set, because I'm a technical trader, I put, Fibonacci retracements to see how far we retrace the move and just kind of where we're going from there.
That's fair. And one question I got on Twitter a few times actually was where did you find the comfort in when you were ready to size up? When did you feel like, right, I can start really throwing 4, 5, 6, 7, 8, 10,000 into a trade or more?
When I saw statistically what I was good at, when I knew that every time I took this particular setup and this particular trade, it was a winner 75 to 80% of the time. Right, I'll take the 20% loss time. No, I'm not going to be right every time, but we're looking for high probability plays to begin with, right? So if I got a 75 to 80% chance of winning on this based on previous what I know, then I'll take it every time.
Yeah, so it's crazy because a lot of people are just wondering how you've got where you are. But from what it sounds like, it's like you've traded, looked back at the data, found what you've been successful at, and then you've tracked the winning percentage of what you've tracked at, what you've been good at, then it's proven to be true in the market, and then you've just sized up. It's as simple as that, but it's a long process.
It is. And that's where people, they kind of get, when it doesn't happen right away, they're more apt to just kind of, well, it's not happening for me. I don't know how these guys do it. But this is like, this is years of process, right? To be a day trader, you really need to love doing this. It's not just a supplement. For some, it can be a supplement of income. But if you're really going to do this, it takes years of frustration and wanting to quit all the time and knowing that it's like, what am I doing? I can't do this. But as long as you don't quit, I think that's the biggest thing. You may want to all the time, but just stick with it. Because if you really want to do this job, it's going to take a few years to kind of get acclimated.
Yeah, for me, me personally, as an anecdote, as of right now, I'm in Florida. It's like 20 degrees and a foot of snow in Michigan. It's 85 degrees and beautiful here, but I'm still up at 6 a.m. looking at the markets because, man, that's my passion. That's why I want to be here. And I'm not doing that because I'm like, a lot of guys are just like, well, I need to make some money somehow. And that might work over time, but you got to really, back to Gary Vaynerchuk, you got to fucking want it. And you can tell that you've got that. Yeah.
It's like, I see a lot of traders and that, they'll tell me, I said, what are you doing up at 6 a.m.? I get up 2 hours, usually 2.5 hours before the market opens. I'm looking at, my news wires and seeing, I want to catch stuff early so I have enough time to be prepared on what I'm looking at. Because I don't just randomly pick a bunch of stocks and hope they go up or down. I'm looking at very specific ones based on news and earnings and whatever it is. And then, I could have 40 on the list by 7, an hour in. And then I just kind of like delete them all based on volume or whatever it is. We just kind of
I call it, what I call it, and I do the exact same thing and have done it for years. I build that list up and then I tear that fucker down, and then ideally, then you build it up, you tear it down, and then you've got that handful that ideally you're not going to win every time, but those are your go-tos. But you just repeat that process over and over every day.
As of yesterday afternoon, I had 32 on my list, and then I narrowed it down to 6 this morning.
Steven's got a few questions. Yeah. So go ahead, Steven.
If you want to rapid fire these, just a couple of people on Twitter. Cody Neal on Twitter said, have you got any advice for small accounts and how to handle emotions? And he just wanted to say that he thought you were a very helpful, nice guy.
Oh, well, thank you. That's my goal, right? Hey, if I suck at being a trader, at least I'm a nice guy. For small accounts, I would say try not to risk more than, it's hard to say what a small account is. Is it like $1,000?
Couple of thousand bucks.
For me, I would say try not to risk more than 3% of your capital on one trade, just to kind of, give it a percentage wise. That's kind of what I stuck to. If I have a $5,000 account, I don't want to risk more than 3% on any one trade, right? Because I don't want to expose 20% of my capital in my whole trading account on one trade, right? Because you do that 4 or 5 times, and then where are you at? So I would say, and as far as emotions, that just comes with, over time. There's no way to get around it. Even to this day, I'm still an emotional trader at some point, right? But it's just a matter of finding what you're good at, sticking to that no matter what, right? To stop trying to be whoever else you're seeing making these big gains. Whatever you're doing, it will come. It just takes a little bit of time. That's all.
Yeah, the analogy I use a lot is it's like, not saying that trading is on the level of the battlefield, but I always just use the analogy of the fresh recruit versus the guy that's done 3 tours. Yeah. They're looking at the same battlefield. The guy that's done 3 tours is like, whatever, I've seen this before. The fresh recruit's panicking. What's the difference? It's just experience.
It's just a matter of screen time. Whether it's you're watching your screens live and paper trading it, or you're actually trading them live. I think the best way to get over it is you have to be in there. You have to be willing to lose real money in order to experience that emotion that you go through, that if you're down. But like I say, for small accounts, take your P&L off your screen. Quit trading the P&L. Just trade the chart, what's in front of you, and let the P&L take care of itself. Because basically you had a plan going in, and that plan is going to work out one way or the other. It's going to be a win or a loss.
And
we'll find out what you learn at the end.
One of the biggest points, I wrote down 4 or 5 different things, but I harp on this, but I love what you said about, 2 things about trying to trade like a computer and having a written plan. You can go back on my Instagram feed and, I've got all these index cards where it says, this is the entry, this is the exit, this is the stop. And then that's it. At that point, it doesn't matter what the P&L is, because before you entered, you said, this is where I stop, this is where I take profits. Yeah, and then you're just like a computer.
And what I tell a lot of people is that no matter what you do, as soon as you take a trade, you're red, because you're going to pay commissions, right? You're already down in the hole. So every trade you take is red automatically. You're not going to click the button and be green, right? I just, that's just my thought.
All right, Steven, rapid fire your questions.
No, very cool, man. Just one other thing to say is it was very cool to speak to you about a year ago. Good to see you, and you were in a truck. Last time I spoke to you, you were in a truck. Inventory trades.
I think I was talking from the Whataburger parking lot at the time. Only chatting last time, yeah.
So great to see you've took the next move, and I just wanted to finish for me on saying what's next for you as a trader, and what's next for you in life, I guess.
Man, it's hard to say right now. Right now I'm just kind of getting adjusted to this lifestyle. I think the biggest thing for me is that with the other job, I made good money, but I was never really around to enjoy it with my family, right? And that's the whole point. That's the whole point. What I think everybody's looking for is to not exactly work less, but be able to enjoy more of your life. right? And not have to just slave away and be in this little box that everybody thinks you should be. Like you should go to college and get a degree and then get a good job and be an engineer or whatever it is. And then, just have 2 kids, do a family until you die, right? I mean, you spent your whole life working, and myself was included up until this year. You spent your whole life just doing kind of like what you're pre-programmed to do. So now it's a whole different perspective, right? Like I can trade however long I feel like it. If I feel, I can always call the boss and he's okay with me taking the day off now. If I need to call in sick, there's no problem. I call the boss and he's okay.
Yeah, that's actually one of, something I talk about a lot is a lot of times people are always, if it's a slow, there's always a trade. There's always a trade. But if it's slower or if there's not much going on, I'm like, hey, one of the reasons we love trading so much is you could just be like, like that meme where the guy throws up the papers. He's like, fuck it. I don't have to be here.
Yeah.
Like you said, you don't have to call the boss and say, man, I'm not coming in today.
If all else fails, trade TVX, TVIX, or UVXY. If all else fails, there's nothing out there. Trade those 2 tickers and you'll do just fine. For me, for next, it's just kind of adjusting to this lifestyle and making the most of it and trying to sustain it. Because, as quick as it came, it can all go away if you don't adhere to certain things. Because, having the success or not really, I don't consider myself a success because I'm not living in some $1 million home, driving all the fancy cars. I drive a Chevrolet, I got a Chevy,
Hey, me too. Me too.
I got 2 kids that are 5 and 6. I don't need a Ferrari, because it's not going to benefit me as a Ferrari. But I think just more or less the having that opportunity really is to just do what I want to do, what I've been dreaming of doing for the past 3 years. And now it's become a reality. So, it's every day I found myself wanting to go to work less and less and do this more and more. And I think that's what the real drive is that I'm not going to give up on it. Whether win or lose, just kind of stick to what I know, what the possibilities are.
Well, hey, Arick, I want to first of all, I want to appreciate you coming on. I would love to have you back at some point. And, a lot of the listeners always, they're always kind of like, what can I take away from this episode? And I just, before we let you go, I want to run through for the listeners the biggest bullet points, I think, from Arick. Number 1, he paper traded for 8 or 9 months. Okay. You need to walk before you run. He had a 3-year plan. He didn't say, okay, I'm quitting my job tomorrow. I'm not quitting my job next week. He was like, when I'm consistent, when I feel like I know what I'm doing, and that may be years down the road, but he had a plan. And then, the written plan, big thing, write that shit down and then stick to that plan. And I think the biggest one, we kind of jumped over it, ran out of time, but focus on losses. I think about, obviously the sad fact that I grew up a Detroit Lions fan. When Barry Sanders scored a touchdown, he just handed the football to the ref because that's what he was supposed to do. When you make money, that's what you're supposed to do. Focus on the losses. Review them. Think about what you did. Did you have FOMO? Did you trade against the trend? Did you misinterpret the news? Focus on those losses and learn from them.
Yeah, and not quit being biased on everything. Do not have a bias one way or the other. Just be ready to go. If you have the ability or the knowledge to short if it calls for it, or go long if it calls for it, or both in a day. You could short the first part of it, and then it may later in the afternoon turn green, and then just push through the moon. Just be ready to go at any point. So just knock out the bias. Say, quit being I'm an only long bias breakout trader, right? Because then you miss out on so many more opportunities. Or I'm just going to short no matter what. I think that's the biggest. I think Tim talks about the short sales. Regardless, I'm just going to short it. If it keeps going up, I'll just add and add and add and add. Eventually, I'll have a good average. Maybe in 6 months when it comes down.
That's Steven's core strategy right there, man.
Add to the losers.
It used to be until I lost $5,000 in one trade, and then I was like, I'm not doing this anymore.
Yeah. I lost $3,000 on a trade like that doing back 2 years ago. It was like almost $3,000. I just kept adding into the short because it was up too much, right? On the day. But yeah, so yeah, guys, I appreciate you guys having me on.
Yeah, we'll let you get out of here. Go ahead, Stephen, kind of wrap up for us here.
No, very great to have you on. Really would like to see you back on again, and just thanks for your time, and I hope to see you soon.
Yeah, man, I appreciate you guys having me on. It's been fun.
Hi, this is Erica Meyer from Toronto, Canada, and when I'm sitting at the cottage, I like to listen to Stephen and Tim on Steady Trade Podcast. You can register to win real, actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write us a glowing review on iTunes. I did, and this is how we say goodbye in Toronto.